For the whole world 4 or 5 days ago, watching and following with great caution what is happening in American banks, specifically a bank called SVB, because this collapse reminds people of what happened in 2008 and the recession and the global economic crisis, because it is not a small bank, a large bank, and it occupies the 16th place in American banks in terms of assets. It owns $200 billion, and the collapse of this bank is the second largest in the history of the American banking system, although what is happening is completely different from what happened in 2008. Despite this, people have the effect of fear of spreading to the rest of the American banks and turning this crisis into a major financial crisis. Quickly cup your coffee and focus with me. From the beginning. Firstly, what is the story of the establishment of the bank? Because it is a major aspect in your understanding of the whole crisis. SVB Bank was established in 1983, and it was the beginning of its work in real estate financing until the mid-90s, but it made losses and realized that this was not the best field for it, knowing that at this time the rise of the field of technology began, and it became very clear. Despite this, some banks did not understand and realize this, or the picture was not clear to them, that before offering loans, the first must guarantee that they will actually reap a profit and guarantee their money. But the technology sector does not achieve any profits in the beginning and needs a lot of time and spending. Large sums in order to be able to profit, and this is what the large banks did not understand or were not interested in. And here SVB Bank appears. So it began to give loans to the two small partners without complications or guarantees. And at the same time, it began to expand its relationship with the funds of the venture bank, people that did not have problems with high risks in return for its percentage and shares of emerging projects. What does the bank benefit from this, taking from this and giving to that? And here, because the bank forced the startups to have banking dealings with it only, and this is a very smart idea because the startup company will have money from venture capital investors who definitely need a place to deposit these money in huge sums, not the house. And through the bank, they can spend in terms of salaries, rents, research expenses, and others. So all the company's dealings are done through the SVB Bank, and this talk was not a problem for companies in exchange for borrowing. In return for this, SVB Bank acquired 50% of the emerging companies in America, a large number, and with time, SVB Bank has become a lot of money. And according to the regulations, it is supposed to keep only 10% of the money, and 90% of the money is free. That is, dispose of it and invest this money. And here, what will he do with this money that he owns? And here, he will do it, like the rest of the other banks lend to people. But SVB Bank searched for a safe way of lending other than government bonds. Here, he will take large interest on it, and if it happens that the plaintiffs want their hopes quickly and in large quantities, and here the bank sells the government bonds it owns. And he bought large quantities of the plaintiffs' money, government bonds, and the situation was stable. But in the year 2020, the situation was affected by the coronavirus, and contrary to what is expected, technology stores exploded with money and profits, and this is far from the stimulus packages that the U.S. government pressured for people and companies. And here is where people will put this money, of course, not at home. They will go to the bank. During this period, deposits in banks were large and very many, but what will the bank do with this large money? This is true. It bought government bonds until it reached $120 billion. And in the year 2022, the war broke out between Russia and Ukraine. And after that, inflation and raising interest, controlling inflation, and this is what caused a big problem for the bank. Why? Because SVB Bank, when buying government bonds in the period before 2022, the interest was close to zero. But now the interest rate is close to 5%, and there is a possibility of raising interest more in the near future. And this high interest puts pressure on companies. For example, as a person who lives in America, instead of investing my money and taking great risks that may reach a big loss, I will put the money in the bank and get this high interest, and my money and I are safe. And this talk destroys companies, specifically technology companies, and made them stagnate. And this greatly affected revenues, and they decreased dramatically. And these companies began draining all their accounts in SVB Bank because of the obligations that the company owed. As for SVB Bank, he did not have enough cash money because he put most of the money in government bonds and was dependent on the withdrawal and deposit movement that occurred in the bank. And that small technology companies did not profit or reap the revenues as before. Here is a simple question. What happens if the bank sells the government bonds it owns or part of it and gives the companies that need it from their accounts in the bank? And here the problem becomes, because he will not be able to do this, otherwise he will lose a lot of money. Why? An example of this is that I am a person who owns $1,000. And I bought government bonds for an annual interest of 1%, and this bond has a specific time period, such as 4 years. Should I wait after 4 years, assuming that I want the money after but years, and that I want it now? It is very easy. You can sell it in the market to anyone, and you can earn a good amount from it. For example, $1025, and how do I earn from it? Because it is possible that at the time, when I sell the bonds, the interest will decrease from 1% to 0.5%, and at this time, the 4-year bond will have a higher price, and vice versa. You lose a lot. This is the situation of SVB Bank. It bought the bonds when the interest was very little and its maturity date was very far away, and depositors needed their money now, and interest rates in America rose to about 5%. So if he sold the bonds now, he would lose a lot, and almost the total amount decreased to $15 billion of its value. Because of the pressure of depositors on him, he was forced to sell bonds worth $21 billion and lost almost $2 billion. And these losses must be compensated because of the demands of the depositors. He wanted an increase in his capital. He tried to get $2.25 billion, but he failed. And the credit rating agencies decided to reduce the bank's rating, which caused a sharp fall in the bank's share price by more than 60% last Thursday. And here, anxiety spread among people and companies because of this situation. And on Thursday, they withdrew $42 billion, and we saw a crowd in front of the bank. And the next day, Friday, the shares fell to 70%, and trading was stopped. And here the banking regulatory agencies entered and closed the bank and took control of it in order to protect customers' money. And this is not SVB Bank alone, but there are other banks, specifically the 4 largest banks in America, and they lost $52 billion of their market value. And other than a sharp decline in regional banks, where are people's money? Is this finished? And the answer from several past days was yes, and although there is insurance on the account and funds up to $250,000, but if it is more than this, then it is a big problem. And the biggest problem is that more than 96% of depositors are in their bank account is more than $250,000 because most of them are companies. And whoever owns less than $250,000 got his money, but the rest did not determine his fate. And a few days ago, a system was issued by the government to save the situation, and that anyone would get his money in full without losses. It means that the Federal Reserve Bank will intervene with approximately $25 billion to save the bank and another bank that was closed, and the aim of this bank is to give safety to customers in the banking system and banks of America by means that the SVB Bank abandons the idea of selling the bonds it owns. And in the end, why is everyone afraid of the collapse of this bank? Because if this bank fails, some companies will expel most of the workers. And this is a big problem for the American economy. And Gary Tan, CEO of the Y Combinator company that incubates many startups, said, if this bank fails and is not rescued, this will become a very big problem because these startups are new ideas and outside the box, such as OpenAI, and this may affect 1,000 startups. This bank has more than one branch around the world, such as Britain and China. And this may give you an idea if they leave this bank in failure without saving it, because it may affect me in one way or another in the American economy and the world. And even after that, things are unstable and there is anxiety among people, so what? So, in the future, you will know in the next episode. I encourage you to subscribe to the channel. Thank you,